Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, March 7th, 2019. I wanted to do the video today, try to get it out before the close as we're heading into the last hour of trading. It's actually 3:22 p.m. Eastern as I start the video right now. So that I don't want to spend too much time on the daily charts, but we'll just start there real quick. I'm not going to cover all the details I've covered recently, the bearish PPO crosses, oversold readings, everything else. But most important is that not only the failure at that resistance level I've been pointing out, again, that was even heading into the end of last year, that was my max upside bounce target, but it's the impulsive reversal, the impulsive selling that we're seeing off that level. We hit it once, okay, we consolidated, tried at it, made another attempt at it, and then rejected with that impulsive red candle. And again, I mentioned that's a bearish engulfing candle. Don't take those lightly because they come at the end of an extended uptrend, and there's nothing, not even these, and these aren't close to being 100% accurate, but there are no 100% buy or sell signals in trading, but it's a pretty darn good one when confirmed with additional red candles. So right now, look, anything is possible, but the case that I was making there for a top has only been strengthened with this additional selling because that helps to validate that. In other words, if you had a green candle that the following day, you close, especially if you closed above it, then it loses its value. So I mentioned that they're excellent patterns to trade when you get those, or candles, because when you get the bearish engulfing, and again, you didn't just have it on SPY. I already talked about that. You had it on IWM, you had it on just about everything but QQQ, and a lot of indexes too. And so they're super simple because you go ahead and you establish a short, or you can, if you're long, you can set a stop below in case this happens, in case you get this confirmation. But for a short trade, you put a stop above the recent highs, and that's it. So again, it's all about risk reward. Your loss if stopped out is minimal, less than 1% on that candle, or about whatever it was at the time. And so far, even if you were to have covered today at the lows, then you made what, 2%, again, if that's on SPY. IWM has done a lot more. So anyways, I just wanted to say that it's looking good. That's my point. Let's move on to the other indexes. Here's QQQ. You can see the uptrend line off the lows broken, and today, the Wall Street Journal put an article out. And again, it's old news to me, but they had a bit about how the volatility has been decreasing. But it was a nice piece because they showed you statistics, the daily ranges and all that. And they also mentioned that's what you see here. You see volatility compressing, price compressing, leading up to these highs like you had here as well. And just shows you the big gains and the big price swings that came early in the move, and that's where the money was to be made. So there were a lot of red flags right here, especially the waning momentum, the market at resistance, divergences, bearish PPO crossovers, oversold, everything. And again, big red candle today in QQQ. Let's look at one more IWM. IWM, just a big old steep, steeper the wedge, usually the harder they fall. I've seen this hundreds if not thousands of times in stocks when you have these dangerous ascents like this, especially in the market or in individual stocks too. A very steep uptrend line, sharp wedge. Usually you don't just come in and correct, a mild correction. So you can see IWM has come down hard so far. And just in what did I talked about this in the trading room today? Let's see. Well, we topped there, but most of the sellings come the last few days, last 4 days. And so from here, well, let's do it this way. From where we're at right now, look at that. You've wiped out, well, all these candles for sure wiped out. And that is, if I put it the crosshairs right here, 24 days. So you've wiped out over 3 weeks of trading, and that's what I talk about time and time again. That's why the risk reward is just awful here, especially those in 401k type things where you say, okay, well, the trend is my friend. The trend is my friend. I'll buy buybacks. And then so what happens here? If you keep that mentality and you're not paying attention to the technicals, okay, so right here you had there's where we started losing momentum, right? Momentum was waning. I mean, probably some might have saw bull. I'm not trying to draw a bull flag, but some might have seen that. So you see the waning momentum, a couple pullbacks, and you say, well, no, it's just like here. It's not a warning sign. It's a good thing. It's a buy the dip opportunity. Like I bought the dip here, or could have bought the dip if I was in whatever, and bought it there. And again, I'm speaking for the mentality, the psyche of investors and traders. So okay, at which point, and then you started to go up and say, okay, great, that was over. I was smart. I did the right thing. I bought the dip. But then boom. And so what happens is, and you have a couple more down days, and then a big day yesterday, big red candle in IWM, even bigger than today's, and it dropped, I don't know what it was, over 2%. And what happens is most investors, when you get caught in that quick swoon down, again, you have 401k money, you couldn't pull it out in the morning, your order goes through at the end of the day anyways. So they say, okay, well, I'm not going to sell now. That's I'll just wait till we get back to where we were. I see the market is starting to show some weakness. Maybe it did get ahead of itself, and so what happens? You get trapped in. Now the market is cruel. It doesn't like to let shorts out. It didn't want to let shorts out back here. I'm sure there were some that came late to the party or stayed late to the party, and I pounded on that like crazy, that you do not want to be the last guy standing or in a game of musical chairs when the market's going down. You don't want to be the last short standing, because again, what happened on the 26th, and then after, it's just a relentless move. Same thing happens if this is bear market. But even if it's not a bear market, even if we're just seeing a correction, it's not a bear market rally, there it is. The top came quick, and it didn't let out longs, and it didn't let shorts in with an objective entry either. So now what do? Let's say you've been wanting to short the market, but you were wanting to see I don't know, a green light come on. Well, it's not objective right now. Now we can certainly go down more, but we're already at support. In fact, I have levels, and I covered some of those yesterday. Let me turn back on my drawings. You can see as I go through different boards have different levels. IWM's at support. So a lot of the meat, at least for the initial leg, unless we get into some kind of meltdown type thing, anything's possible. But a lot of the meat on the bone has been stripped off this initial leg down. So where I want to go with this video, the point I want to drive home is I'm very eager to see how the markets behave from here, because as I'm showing you, you have IWM at support, by far the biggest correction since the bottom started, and by all means a healthy correction and a pullback, talking 5% off the top. Or more. If I didn't even, I'm just rough estimating, popping up. Yeah, 4.5%, almost 5% off the top. So let me say this, and this is the point of this video. If this was not a bear market rally, if this is a very strong bullish move, like a lot are calling for, and this market is going to new highs, this is where the dip buyers should be stepping in. This is where those that believe it want to buy. And if it doesn't stop here, well, of course, you have a couple more levels, but with a 5% drop, there shouldn't be any reason that longs, if there are still a lot more willing longs on the sideline, aren't stepping in at this point or won't be soon. And that is, if there's one simple thing that drives the market, I know everybody says the Fed, and I understand the Fed has a big influence on a macro level, printing a lot of money, all the global central banks, but day in, day out, what causes stocks to go up and down is supply and demand, and it is that simple. More buyers than sellers on any given day, a security will go up. More sellers than buyers, it's going to go down. That's what makes the market go up and down, not the Fed. So the point is, let's watch the price action here. We're at support. I'm going to get to the large caps in a second. I probably should have started there. They're more important really than the small caps. They're the majority of the market capitalization of the stock market by far. The IWM is just a fleck compared to what the market cap on the S&P 500 is, even though you have 2,000 stocks here. But point being, let's see if the buyers step in. Let's see if this is a buy the dips. Here's the 50-day moving average coming up. The IWM has just hit it. Let's get to let's look at those other two from daily again. SPY. I have a lot of different boards here. Let's see what board. Well, there's the failure at the recent highs. Got a gazillion boards here. Let's just go look at, well, there's one. Also, failure at the 78.6, and there's a wedge. There's the story of SPY off the lows. Really two wedges. The first one corrected more in time than in price, and but it did have a correction price, and this one is obviously off to a different start. You can see from the look of those candles. So let's jump over to QQQ. Big impulsive move down through there. I can draw trend lines. This is a main trend line that I've been looking at recently, and broke that. And I don't have all my annotations on this daily chart, but this was the 60-minute uptrend line here that was just broken, and big bearish red candles so far. And from the looks of this, it doesn't look like this correction's over. Counter trend bounces aside. So let's get to the intraday charts, and we'll wrap this up. Okay, I toggled over to QQQ, but we have an active trade on QQQ that we just recently entered, so I'm going to skip that one because it has my price targets on there. I'll show you some generic, these are generic price targets, rough areas, support levels, if you will, more so on SPY. And you can see SPY is coming up. I'm going to get to the futures in a second. They speak a little clearer to me right now on the levels. SPY still has a little room to go here, but it has broken this trend line, this blue trend line, which I think is pretty significant. A lot of reactions if you follow that one to where I have it started, and that's a clear breakdown. I also mentioned in the trading room this afternoon that I actually, about 1:30 or so, right off the lows today, I reversed my swing shorts, my index shorts on NQ and ES. I'm sorry, not ES, NQ and RTY, the Russell 2000, and gamed a bounce. And it was just an intraday bounce. It was this bounce here. And then I got out of it because what I had said after, well, first of all, when I did it, instead I reversed, I clearly stated I was only looking for a day trade that at most would be sold before the close today, but more likely before then. And then what I had highlighted after that, and the reason I reverse back to short, is this: we had some nice bear flags. Now this is a 1-minute chart. I'm just showing you the price action, but these were the bear flags that I pointed out in the trading room, and there it is on a 30-minute chart. So you can see the nice bear flagging type action in SPY. If you're not familiar with what that is, bear flags are continuation patterns, and they consist of really 3 parts. You have a flagpole, which is the move leading down. It's usually it is an impulsive move, I should say. That's followed by a not impulsive move. What happens is volume is pretty high on the move down. That's impulsive. And then you start flagging on declining volume, which you have here. You can see down to my volume bar. And then finally your sell signal comes if you want to, in case get back short, or if you missed a short or you're looking to add on, you want to see a breakdown below the flag. And that's what we had on this candle right here. There's your big red candle, and you want to see it impulsively. What I mean by that, not just a little tiny red candle like these. See, these are unimpulsive candles. That's the nature of the flag. And then you have a big red candle on expanding volume that confirms the breakdown. So the way these play out, if this one will, not everything plays out. There's nothing 100% in trading, but you take the measured move, which is the distance to the flagpole down to the bottom of the flag, add that to the top of the flag at the point where before it broke down, and that gives your measured target. Now I'm just dragging here. I didn't measure that line exactly, but you can see to the left there's a nice old gap that comes in, 2 gaps that come in right there to about where I measured. So I'll just tell it to you straight, that'd be the measured target, and I wouldn't be surprised to see SPY hit there, but I'll have to also confirm that with some other levels. But so far, let's see if these flags play out. If they do, it'll have bigger implications, because it'll take us down through some key support levels that we're on right now that I'm going to get to here in a second on the futures. So sometimes these flags look like they're going to play out and they don't, but a lot like those bearish engulfing candles on the daily that I pointed out the other day, that strategy, that the reason I love them, that very low risk strategy. So you see a bearish bear flag pattern, and you want to get in front of it. You might take a position within, but if you want to do the conventional thing, you wait for a break. There's your impulsive break. So at that point you short, and just like with that bearish engulfing candle on the daily, you set your stop above the point of the flag, the highest point of the flag. So your stop is minuscule. Your loss is minuscule, I should say, if stopped out compared to your profit potential. So it's trading 101. There's no guarantee that this or any pattern will play out, but you can guarantee you can keep your losses tight by stopping, and you have profits really large if you look for these patterns and wait patiently for them to set up and then trigger an entry. So far so good. We'll have to, it really helped to see a late day dump into the close and close down towards the end of the day red. That would be a big plus. and even better to see a gap down tomorrow and have this impulsive nature of this flag continue to play out. So that's one thing I'll be watching for. Here it is on QQQ. Nice little flag right there. It's a pretty clear flag. There's your flagpole. There's the impulsive breakdown so far. And will QQQ continue on down and maybe come in? There's a gap it might want to take a run at. And remember, measure targets are just estimates of and I'll tell you, over the years you'd be surprised how many times they play out almost to the T, with perfect symmetry to the flagpole. But I always like to look at, if I'm looking at the charts, I'll look at a level first and line that. Again, I'm not going to get specific on QQQ. It's an active trade, but let's look at the small caps, and then we'll get to futures and we'll wrap it up. So here's IWM, and you can see their flag, much more impulsive flagpole. Here's your flagpole right here, all the way down to the formation of the flag, flagging type action, breakdown so far. But see, the problem is we've got support right here, and I'm going to get to the futures in a second. So we really need to, like I said, to really open the door for another leg down. Let's see, we need to take out the lows of the day so far by a pretty good amount. Yeah, if they buy the close today, it'll keep everyone guessing, and we might have to wait to see what happens. Do we gap up or do we gap down tomorrow? But if we gap down and it's not too much, you may still get an objective entry there, because that means those flags will be playing out. So now let's look at the 60-minute charts. Let's go to, let me look at these charts here. All right, this is NASDAQ 100 futures. What stands out, or probably the most salient points on this chart to me, are these the uptrend lines here that form this price channel. I'm trying to get the right tool. This uptrend line right here. So we had this price channel forming after we broke the primary trend line right here, or at least the one I was looking at off the lows on the 27th. A lot of reactions, broke down, back tested that, and so you can see we've been grinding in this channel here while we continue to diverge. So it was these divergences that warned of an impending trend change, of a correction. And so any one of these tags at that level could have broke down, but it didn't. But we finally had a breakdown recently, and now an impulsive move down. And guess where we're at? Yep, that's that reaction low, and it's also support, the February 21st reaction low. From that day and since that day, I've been saying we need to see those go to really open the door for some selling. It's also support. So right now, like I said, you have NQ at support. So it's anybody's game. Right now the onus is on the bulls to step this up. As I'm doing the video 20 minutes ago, unless there's a big move, they're either going to park it a little bit above, a little bit below, or on that level. It's going to keep everybody guessing. So I'm really, this video, even if you get it after the close today, it's not going to matter. It's going to tell you what to look for tomorrow. You can see some support levels down below on NQ, and I do favor that, despite any bounce. Unless anything else happens, like I said, if I'm wrong on where we're at in the bigger picture, then this is again where the bulls could be stepping in and really just help start to chip away at the bearish case. Because like I said, if we go much above where we stopped last week, that was my uppermost bounce target. Doesn't mean it has to stop there. We could certainly go up a little more and still go down and have this end up being a bear market rally, but it would really start to dissipate, if you will, or chip away at the bearish case. So let's see if the market holds down below those highs, and these are levels to watch. So if we break that tomorrow, I'll keep it simple, or today a heavy move down in the close. I think we're coming down here, and we'll continue lower, something like this. That's NQ. Let's look at ES, the S&P 500 E-minis. Now they've given up the ghost, or at least on that level I was talking about. Again, that I'm talking about the February 21st reaction lows. It's pretty well defined. We had reactions there, near reaction the other day. Again, like I mentioned yesterday, we parked on it, and this is what I was talking about. So we had a little bounce there, and it got sold into. This is where dip buyers should have been buying the dip. That was a pretty decent pullback on SPY. They didn't. So the buyers didn't show up. We came to another support level today. I'll say this, not the best support level, but I do have a level there. And again, so far, very muted reaction. So right now, it seems that at least for the very near term, it's safe to say the supply dynamics right now, they have shifted, and people want out of this market. or at least taking some profits, and that's maybe all it is. Before I leave this chart, I will point out some potential bullish developments, potential divergence here, PPO, RSI, not on the MACD. So we'll watch that if we get a reversal here. We'll also look at this. If we do reverse, we have the early makings of a downtrend line, and we'll probably have that on SPY as well. But this is the ES, the futures. So keep an eye on that downtrend line plus this yellow line. This is resistance right here, and call it about 2763.50 or so. And then finally the small caps. It's been a lot of money to be made on the short side. Like I said, they've dropped about close to 5%. Pretty decent resistance here, nothing great. But again, we had that level yesterday. We closed at very muted bounce and another leg down. And so these are the things I'm looking for to show character of this market. Where are the dip buyers? They didn't show up yesterday where they should have. Again, and I'll say this: these are early targets. The S&P, the NASDAQ 100, they're not down that much relative to the move from the bottom. In fact, I'm not even going to bother putting up Fibonacci retracement levels. There's still plenty of room if this market wants to correct and to be a healthy correction if it's going to new highs. So let me give you that right now and say that what we've seen the last few days doesn't mean. Does it increase the odds that this may still be a bear market rally? Yeah, a little bit, because we failed where we should have, and we failed impulsively. I'm sorry, so far. But these are the things I'll be watching for. How does the small caps? How do they treat this support level we're on right now? Do they just pause here and continue through? This one's a much better level. I have one, two, reaction high there, couple reactions here. So what happens if we get down here? We should certainly bounce there. Should, in quotes, big quotations there. Should bounce, because that's a decent level. And at that point, if we keep going through, well, I'll start to put up Fibonacci's and really try to identify. But like I zoomed out in the daily charts, and I can just tell you again, the critical levels, if you want to give it critical, it's right here. These lows back here. And again, we'll jump back to the dailies, and I'll wrap the video up right there. IWM daily chart. Nope, that's not a daily. There it is. Let's get rid of all the annotations and again show you what I was talking about yesterday with the WTF zones. So this is a level that any correction, if you want to keep the case alive for that this was just that this was not a bear market rally, it was just a move, leg up on the road to new highs. This is where we should hold, and anything above and beyond that starts to enter that WTF zone. But again, if you're going to put weightings on anything, you want to watch the S&P 500 and the NASDAQ 100 more so. But if you see the small caps melting down, that's not a healthy market. You don't want to see that. So there it is. This was the that was from day one, or last year, December 31st, my bounce target zone, and there's the upper end of it. That's the lower end of it, and that's also very significant support that if SPY pulls back, and there's still a lot of way down, a lot of percentage points, a lot of way down till we get there, long way down, I should say. There it is, right there. Be about another 5% or so if we get there, and let's just focus on the other levels before we do. Reaction coming up here, some support, 50 and 200 day just below, another level there. Again, I've already shared all those levels on recent, I think I have. Yeah, I don't know. It was on one board or another, but that's the from the video back then, that might the bounce target zone. So, all right, guys, we're gonna wrap it up here. I'm starting to ramble here at the end. Let's just see what happens today into the close. And like I said, you're going to get this video now. I'm looking at the clock. By the time I upload it and YouTube processes it, market will be closed, but it doesn't matter. They're going to park it around where we are now. And I think tomorrow can be telling. And of course, maybe into next week. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.